Hey, welcome. I love that you're here. I love that you're now on the inside, right? But let's get into it. You're here because you want to understand the stock market basics that even a third-year-old could get. You want to understand risk management, and you really want to see and how I leverage my exact trading system that has helped thousands of people generate passive income in the stock market, and it's a great feeling because in the end, our time is valuable and we all deserve to live the life that we want to live. What I want to do with my life could be slightly different than what you want to do, and that's totally fine. And we have the vehicle and capability to do that. For today's training, I'm going to go over stock market basics. What is a candle? What is market structure? What is risk management? And really the same exact tool that I use, right? And I believe that we have an all-in-one trading tool that we like to use, leverage. It doesn't matter the availability or time that you have, whether you have free mornings, whether you're busy, you own a business, work a job, because we really do have a plan that's for anybody. Our one trade a day strategy is really perfect for someone that has a job or a business, and it takes less than 5 minutes a day. Other vehicles that we have within the same trading system that we have is day traders. You like to come in and stand in front of your computer for an hour, 2 hours a day. And if that resonates with you, then you're fine. And then there's a slow approach where you invest. And where I'm going with this is this saying that we have right here. I like to day trade for my job. I like to swing trade to help grow my account. And I like to use the profits of both of them trading vehicles to pay my bills, live the life I deserve, and the extras I put into the retirement account. Before I really dive in and show you how simplified the market is and how we make it, I want to introduce myself. I'm Brandon Harbaugh, 36-year-old from Pennsylvania, sweetest place on earth. Does anybody know where I'm going with it? Going once, going twice? If you guessed Hershey, Pennsylvania, I like you already. Yep, outside of Hershey, Pennsylvania. Absolutely love it, right? I love family time. I like barbecuing, the smoking meats. I love going to the gym. I love fishing. I love the Philadelphia Eagles, and I'm a huge Eagles fan actually. So go Birds, But anyway, in the end, I really believe that we all should live the life that we do deserve. And what that looks like for me could be slightly different for you, My mission is simple. I want us all to make more so that we can bless more, right? And whatever's in our hearts, I want us to be able to give back to charities, communities, churches, friends, or family, all while making the world a better place. So if I uplift you, I made you happy and I'm happy. You're going to go out, and whether you tip someone 40 or 50%, or you tied into the charity or fire department, whatever you want to do, you're impacting them, and together we impact the world and make it better for all. So that's really what I do, what my statement, But anyway, if that does resonate with you, then you at the right spot. Let's dive in and get to it. So let me share my screen. All right, first things first that I said, understanding the market, right? What is a candle? So inside the stock market, you have what we call a candle, right? And a term that loosely floats with that is bullish or bearish. All right. So every company inside the stock market has a price. It moves up and down every second, every minute, every day. It's at a different price, right? And we have something that we use, a candle, to determine or monitor that price fluctuation, right? And you can use different time frames, but we'll get into that a little bit later. So when you come in, think of this right here. When you go get ground beef, and ground beef one day is $5, right? Then 3 weeks later, ground beef goes up to $7. Well, it opened at $5. Now it's up here at $7. And that's kind of how you can take that little visual and put it into a candle. So when we have a candle, I'm going to do a green one first because that means buying, right? You have something right here, right? Two lines we're going to put, and then you're going to see these things right here. And this right here would actually be called a bullish candle. Why? Because it's green. When the candles are green, that's buying pressure, or think of money getting put into something that's pushing it up, right? So I'm going to color this in, and there's 4 parts on this candle. It doesn't matter whether you are looking at Ford, Apple, even if you wanted to look at a Bitcoin stock on the stock market side, it's all the same, right? So you see this candle right here. Always, every candle, right, is going to have 4 components. Now I'm just going to put a white right here. You're going to have the open. I'm going to put O right there. That's where the price at that time opened. So right here, this price opened, and that's where the share price would read, right? Then at the very bottom, you are going to have the low. I'm going to put L right there. Up top here, you're going to have, this is going to be the close, and the very high is going to be the high. So the 4 components of this candle is simply this. You have an open price, a close price, a high price, and a low price. All right. So if we go back to that ground beef example, think of the ground beef opening up at $5, right? And a week went by and it dropped down here to $4, right? 2 weeks go by, it goes all the way up here, right? And creates a high of $8, right? And then 4 weeks from now, that's where it closed, and it will be $7. In the end, every candle has 4 components. If the candles are green, that is bullish pressure, money being put into it, and whatever asset you're looking at is pushing to the upside. All right. The next thing we have, you're going to have something you're going to hear is a bearish candle, right? The same exact thing that bullish candle is. People in our arena is going to say the term bearish, right? Bearish, that means that money is coming out or money is going down. Whatever instrument or asset that you're looking at is actually losing value. So think of green going up, red going down. You guys following me? And that's how easy it is. The same components on that green buying candle, which is a term we call bullish, is the same components on the bearish, except it's a little bit different. So right here would be your open price. Down here would be your close. This would be your high, and this would be your low. So now if you look at the bullish candle and the bearish candle, the only thing that changes is the open and the close, right? If we opened here and it closes underneath wherever that opened, that is what makes it a red candle or price where the stock company is dropping in value, right? Over here on a bullish candle or a buying candle, what that means is the open price right here opens, and anytime it closes above, right, above that opening price, that is what makes the candle green. In our world, that's what we call bullish. So think of green buying, think of red selling. All right, green up, red down. And that's really a candlestick basic 101. The next thing that we have in the market is, I'm going to bring over the white, and the market really moves in 2 phases. You don't have to overcomplicate it. You're really either trending up, right, pushing up, or you're really trending down or pushing down. So what does that look like? Well, if the market is pushing up, you have a high, a reset, you have a high, a reset, you have a high. How we would determine this is you have a high right here, right? And you have a higher high right here, higher high right there, and you have another higher high. Why is that considered a higher high? Well, if the market pushes up and then turns back down, this would be the high right there. Once it breaks that to the upside, we now technically took this and violated it to the upside. That becomes a higher high, right? In the market, this is something from an investing standpoint. If the stock is pushing to the upside, it is in an uptrend. And if the market is in an uptrend, right, do we want to be focusing on our green candles, or do we want to focus on our red candles? In an uptrend, the green candles right here, I'm going to put the star, is what makes us money. All right, that easy. It is that easy right there. Now, in a downtrend, right, you take this and you switch it. You put a high, a low, a lower high, a lower low, a lower high, lower low, right? So now you have your high right here. You have your lower high. You have your lower high. And then you got your low. You have your lower low, your lower low. What makes a downtrend possible, right? Well, if the market pushes down, or whatever instrument you're looking at, and then resets to the upside, right? And you have a line there, and price takes that out to the downside, you now have a lower low. So if the market, right, is trending down, what do we want to focus on? These red candles right here, where this star's at, is what makes us money. All right. So in an uptrend, right, we want to be using the green candles to our advantage. And in a down market, we want to use the red candles as our advantage. The next thing we have is risk management. A lot of people who don't use risk management, they're not here next week, next month, next year. I plan to be here tomorrow, next week, next year, 20 years from now. So you need to use risk management. And in the end, we're going to blend all this together so that you're going to see how you take what you just learned today and use it to your advantage. All right. So think of trader. I'm going to put trader A right here, and I'm going to do trader B over here. And they both are going to start off at $1,000, $1,000, 1K. All right. We both take the same exact trade, and our first trade is a loser, right? In the market, there is nobody out there that is going to win every single trade, right? So we have to prepare for taking a losing trade, right? And be defensive, all right? And what I mean by that is exactly what I'm about to tell you right now. If trader A, right, puts $100 into his account, into this trade, all right, and that 1K now is worth $900 because you got that $100 right there in the market right now, and trader B puts all 1K into the market, and this is our losing trade. All right, now trader B takes a loss, right, and he just blown his whole account, or let's say he lost 50% of his account, which isn't smart because trader B is not smart in this scenario. So his 1K is now worth $500. All right, trader A, his 1K, and if we lost 50% of the $100, his account is now worth $950. All right. So then the second trade comes. Trader B, I'm gonna put a sad face. He's scared to take another trade. He is psychologically beaten. He is not mentally right because he just saw his $1,000 get cut in half. That's not smart trading. That is not what we do, right? When you put together what we just went over, using your bullish green candles in an uptrend and your bearish red candles in a downtrend, all right, you have to put the probability and odds in your favor, and risk management is very, very crucial. The one that does not use risk management is not going to be here in the future. Trust me. I've been doing this for 9 years now, and it's simply not going to happen. All right. So what happens is trader A gets another trade, puts $100 in it, and let's say he makes 100%. His $100, it just turned into $200. His $950 that his account is worth, $950, $1050, he has $1150 right now. All right. And then trader B is upset, and let's say he takes another trade, he risks his whole account, right? His whole account into the trade, and that next trade becomes a loss. Let's just say we experienced 2 losing trades out of 3, which can happen, but it's very rare, right? His $500, he's so mad, upset, and now he has $0. Come back here to trader A, he puts another $100 in, loses 50, now he has $1,100. Guess what? Trader A started with $1,000, and he took 2 losing trades, but because he used proper risk management, all right, he's still in the market, and his account's actually up 10%. Then what's going to happen is you're going to go on, right, a 10 trade win streak where you're making $50 to $100 and so on. So the thing is what I'm getting at, whether you decide to work with me or not, trader A is in the game forever. You want to be trader A, you do not want to be trader B. Do you see why risk management is crucial? So when you go on a 10 trade win streak, you might win $1,000 in profit. Now your $1150 could be $2150. And that is why you use risk management. How do we leverage together high probability trades in the market, because at the beginning of this call, I'm going to show you my exact trading system of how I use what I just shown you in a all-in-one indicator that's proprietary to us and our team that we use, that puts the advantage in our favor. If you've already watched this and everything you resonate, you can click the link below to book a call. We'll hop on, and me or one of my partners will have a conversation with you, and we're going to create you a custom roadmap to success based on your time and your account size. So let me explain. In the beginning, you heard me say I day trade for my job. Day traders are perfect for people that can come in and give, I'm East Coast time, opportunity in the market from 9:30 to 11:30 or 12. That's extended, but I'd say 9:30 to 10:30, maybe 11. Swing traders are great if you're a busy body and you got 5 minutes a day, right? And then investing is great if you don't have time for day trading or swing trading, but you want to be in the markets for that long-term growth. And that's really what you want. So when we come in, that's what we're going to talk about and create a plan specifically for you and your account size. But before we do that, I'm going to show you exactly how I use the market to my advantage, and we stack the odds in our favor. You guys ready? Let's dive in. So this is TradingView. Everybody knows the S&P 500. So I'm going to put SPY. SPY is actually the ETF of the S&P 500 because everybody knows that, right? So what we just talked about, now I'm going to piece it all together, all right? Right here, why is this candle green? Because it opened here, right? It made a low, it came up, made a high, and it closed. Remember, if the candle closes above the open price, you're going to have a green candle. You come over here, why is this candle red, right? Because we opened here, it put a high in, come all the way down here, put a low in, and it closed right there, resulting in the candle being red, right? Green is an upward pressure. Buyers are in control. Red, that is people taking their money out or sellers coming into the market, and they are positioning themselves to get winning trades. All right. Now, all right, what we just talked about. The second thing that we talked about, right, is what's the market trend like, right? Well, you have a low, you have a high. You have a low, you have a high. You have a low, you have a high. You have a low, you have a high, 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 you got a huge low, you have a high, huge low, you have a high, huge low, you have a high, low, high. All right, remember the zigzags that we just talked about? This is real life experience right here. So right here, we have a low, a higher low, a same low, a same low, a same low right there, a higher low, and because that right there, we have a same low, and over here we broke that, right? During this whole time right here, what are you trying to do? To me, right? The market's up. I want to buy here. 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 Buy here, and look at this. You get a winning trade. 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 Now, this confirmed us in a downtrend. Remember, in a downtrend, we wanted to talk about the red candles right here. Sell right here. Sell right here. Sell. Okay, we took this out. Green candle up, green candle up. Now we're back on the upside. And this is what we kind of do collectively together every single day inside our environment, right? We keep things so simplified. If you have $1,000, you really want to put that into 10. Just because you have $1,000, you do not want to put that $1,000 into the trade, right? Why? Because trader A is going to take a buy here. His $100 might turn into 200 right there. His $100 here, 200, 100 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 here, 200. All right. Trader B, he might take the sell right there, and this would be your stop out, and he got stopped out. Guess what? Trader B is not in the market no more. Trader A, 1 winner, 2 winner, 3 winner, 4 winner, 5 winner, 6 winner, 7 winner. And that is why you want to put the odds in your favor. Market structure, candles, and risk management. And that right there is the secret sauce, other than what I'm about to show you right now. All right, so how we take odds further and make trading so simplified that even a third grader could get this is this. You see this tool up here, Swingmaster Pro AI? We're going to turn this on. Now look what happens. It's actually giving us high probability buying and selling opportunities. All right, but first things first, we're going to go to the day trading side, because we're going to walk through all 3 phases of this. Day trading side, 5-minute chart, right? I have 2 rules for you, and these 2 rules are simply this right here. Green candle plus green arrow. That's rule number 1. Rule number 2, red candle plus red arrow. Oh man, Brandon, it can't be that simplified. I'm telling you, my 9 years of experience to make this, and over the last 4 years, we've helped generate over 1,000 consistent traders get their first 3, 4, 5, and 6-figure winning trades. And it is a huge blessing to be in this position. I want us all to what? Make more so that we can bless more. Day traders, this one's for you right now. If we have a green candle, green arrow right here, and this is your stop out at the previous low, there's 1 winner. Second trade, all right, there's an entry, there's your stop out, there's 2 winners. Third trade, there's your stop out, 3 winners. All right, 4 winners. All right, 5 winners. All right, 6 winners. All right, this one is a loser. We'll just say 6 and 1. Right there's another green candle, green arrow, 7 and 1. All right, red candle, red arrow, sell, 8 and 1. Red candle, red arrow, here's your stop out, 9 and 1. Here's another one, 10 and 1. Here's another one, 11 and 1. Here's another one, you got stopped out, 11 and 2. Here's another one, 12 and 2. Here's another one, okay, 12 and 3. Now check this out. I'm a visual guy. In the last 2 days, they say 90% of day traders fail. 12 and 2, so 12 divided by 14, what's the win rate? 85%. Let's just say we won 75%. Guess what? If you use risk management, you're going to be able to extract and create passive income for you day traders. If you can focus on this for an hour a day, right? Maybe an hour and a half, you're going to put odds in your favor. And that's how we day trade simplified. Now let's move over to the swing trades. All right, we're just going to go to the 1 day time frame. All right, and let's see what we got right here. Guess what? You're going to have green candle plus green arrow. Red candle plus red arrow. All right, you ready for this? So let's check it out. Let's take an opportunity in the market. If this was your plan, this is perfect for you. If you are busy and you cannot be in the markets in the morning, this is perfect for you if you want to take these trades at the end of the day with everybody. All right, so this is great if you're busy. Now check it out. Green candle, green arrow, 1 winner. Green candle, green arrow, 2 winners. Green candle, green arrow, 3 winners. Green candle, green arrow, loser. Right there is 3 and 1. All right, green candle, green arrow, 4 and 1, 5 and 1. This one right there is a loser, 5 and 2. Here's another one, 6 and 2. Here's another one, 7 and 2. Here is another one, 8 and 2. Here's another one, 9 and 2. Another one, 10 and 2. Another one, 11 and 2. 12 and 2, right? All right, here's a red candle, red arrow. That's a loser, 12 and 3. 13 and 3, 14 and 3, 15 and 3. And that's our trades right there. So from November, right? Well, I'd say October until where we at right now, May, October, November, December, January, February, March, April, May. It's give or take about 6-7 months. All right. And we were what, 15 and 3, give or take. All right. That is high probability trading right there. But that's my opinion. So 15, now hear me out, 15 divided by 18 is what? 83% probability. Is that something you want to put into your toolbox where you have the opportunity to play with? Absolutely, right? So why do we use risk management? Remember in the beginning, our green candles are buying candles. We want to be in buys or call options. If the candles are red, they're selling, or we want to cut everything or buy puts, and that's how we make money. All right. So now there's two things that I'm going to put a bonus in right now. All right. Those are calls and puts. And we go over all this in depth in our structured trade school that we have. But in simple terms, all right, if you see my cursor all the way over here to the right side, you see that this candle where I'm at is high is at $700 or $572 on the share side. If you put $500, right, and $72, $572 right here, where the circle's at, and you bought one share, and the next day, right, it shot up to $585. So your $572 is now worth $585. Guess what? One day you just generated $13, but you had $572 in the market. Something that we do is we buy a stock option. All right, a stock option, in a very simple terms, allows you to leverage. Instead of buying the shares, you can buy an option contract in this. We go in depth. I'm not going to go in depth in this one right now, but just want to give you a slight little bonus. So if we buy a stock option right here, right, a call, and that's how we make money when the market goes up, right? You could put $500 in a stock option, and guess what? If that happens in one day, your $500 is worth about $4,000. That's a stock option, right? If you ever heard the term stock option, you might have heard horror stories, and it's because people do not know how to buy the correct strike, but we have a tool that tells us the exact strike that we got. Another reason why I also love stock options, how we can utilize it, is in a red market, you could buy a put option, and it's like you buying shares, except you're buying a put option. All right, that same thing right there. If you bought it here and it gapped down, you're turning $400 or $500 into $4,000. While people that don't have the probability in their favors like we do with Swingmaster Pro AI, custom software that I created, right, proprietary to us and our team, then they don't get that, right? They don't get that. All they can do is buy shares and wait for their 572 to come back at some point. And if that's what they want to do, that's totally fine. I like to trade smart, easy, and simplified. Even a 30-year-old can get it. Red candle, red arrow, I'm buying put options. Green candle, green arrow, I'm buying call options. And that's how we can leverage the money. So swing trading, that is how we extract high probability trades in the market together. The last thing we have is investing. All right, we're going to come down here to the weekly time frame, and all you're doing is you're looking for a buy only. All right, here is one buy, right? Here is another buy. Here is another buy. Here's a buy. Here's a buy. And we just got another buy right now at 564. So if you got your buy and you bought shares, and this is my investment side. So remember in the beginning, I day trade for my job. I swing trade to help grow my account. And number 3, I use the money between both of them to pay my bills, live the life I deserve. And then I invest for long-term growth or generational wealth. All right. First buy was $300 on the share. And where's that right now? 564. Second smart buy was right here at 463. Third smart buy was at 392. Fourth smart buy was at 398. I'm actually in this right here. I'm still holding all my shares right here at 398, and it is at 564 right now. The last buy was right here. So what I tell people is if you put money into this and it goes up and you sell out, wait for another buy, right? And now you got profits to take what you started with and put it into 2 companies, all right? So now the next buy, you're holding SPY here, and you have another company. So I'm just going to pull up another company real quick in the market. Everybody knows Bitcoin, right? GBTC, which is the Grayscale Bitcoin Trust in the stock market side. Now check it out. Everybody was panicking, right? The last buy that we had on this was right here, was for $49 a share. It's at $81 right now. Now, if you took from the profits of SPY, and then we went into two companies, and this is what I do in an investing side. I had a buy right here, another buy right here, another buy right here, another buy here, and another buy here. This buy down here was at $9.30. It went up here to what? $57. You're never going to get all that, right? I mean, you might, but the probability is slim. I'm not saying that I'm going to get that, but if I bought here, I could easily sell out right there. If I bought here, I could easily sell out right there. This buy, 35 up to 50, that's a solid what? 30-40% ROI. So now you're taking money and using the market to your advantage with high probability trades. All right? And that is how simplified trading can be. It's as easy as green candle, green arrow, red candle, red arrow. All right? And that right there is stock market basics 101, how we leverage the tools with high probability trades. All right? So with that being said, if you think or know or feel or are happy right now, what I need you to do is I need you to see the link below and book a call. And I'm going to ask you 3 questions in there, right? And within that 3 questions, you're going to hop on with me and we're going to talk about you and your specific game plan, your specific roadmap to success, and how we can utilize one of our 3 vehicles to help you, or all 3 of them, right? Me, I love day trading, I love swing trading, and I love investing. You heard me say it. In the end, I want us all to make more so that we can bless more.